Hey everybody, it's Pete. Welcome to Stocks for Breakfast. It is Monday, March 6th, 2020. I hope everybody's safe. I hope everybody is doing our individual parts, because those individual parts will lead to hopefully getting out of this crisis sooner than later. If you've been watching the news, next couple of weeks look like they're going to be rough ones, especially in the densely populated areas like New York. So let's be safe, let's be smart. But now let's get into talking about stocks. If you find these videos helpful, I would really appreciate it if you click to subscribe. Just as important, if you have any comments or questions, absolutely leave a comment or a question. Even if you just have a big trading challenge that you're trying to get through, I'd love to help you with it. Leave a comment, and I will definitely touch on it in an upcoming video. I want to start today off, though, talking very quickly about something that is super, super important. Super important. That's three supers, right? And that's trade management, and specifically accepting risk. We actually got a couple of really good questions about trades that we called, trades that came back, pulled back maybe a little bit further than what you might have had as your stop loss. If you're a regular viewer of the shows, you know that the number one thing in trading is to let the market do what it's going to do, but you always must do what you're supposed to do. So in other words, what's probably going to happen in the market versus what you are definitely going to do on a trade by trade basis. And if you want to take the risk in the market where you want to take control of your financial future, you want to say, I'm in charge of how much I make, there's a big key that you need to be on top of all the time. And that's if a stock goes down to your stop loss, get out. Don't hold it. There's so many more opportunities. There's so many more chances to earn money, and quite possibly even in the same stock that you just took a stop loss in. Real traders, and there's really no other way to put it, real traders, not amateurs, not. And if you don't know, I had a seminar business for years. I was traveling all over the country teaching classes. I would do a live 3-day class in individual cities. The amount of people that had absolutely no discipline was scary. Absolutely scary. Averaging down into positions, buying more of a bad position. And let's put that in context. If a trade's not working out and you keep adding to it, and I'm talking about a trade, I'm not talking about what brokers do, a dollar cost averaging, where you're going to hold something until you retire. That's very different. And even that's not the smartest thing in the world. If you decide where you're going to get out of a position, get out. That's what real traders do. Real traders don't hold losing positions past where they decided they were going to get out. Now, I want to talk about an advanced topic here, which is super helpful, I think, to a lot of people. Let's say, for argument's sake, and let's start out with risk management as the top part of what we're doing it. The easiest way for you to manage a trade that's not working out, that goes down towards your stop loss, is for you, the first thing you need to do before you get in the trade is say, how much money am I willing to risk on this trade? What dollar amount? And I'm going to tell you why it's super important, because we're going to take a look at a trade in Chewy, CHWY, that we spoke about a couple of times last week. Whatever that dollar amount is for you. Now, if it's investing, I know Investors Business Daily has a certain percentage. Some traders talk about 2% on an average, intraday. Whatever that number is, let's just say, for argument's sake, it's $300. Just throwing a number out there, because I have no idea how much you personally are trading. And the bottom line is this: if you go into the position saying, I'm willing to risk $300, again, just a random number. If you're willing to risk $300 on a position, that means in your mind, you're willing to say, okay, I understand I'm putting this money at risk, and I'm okay with that in exchange for the profit potential. And I know you've heard me say that a few times, right? But I'm already seeing posts from people that are holding trades past their stop loss. If a trade goes down to your level and you accepted the dollar amount risk, you just get out. Now, an advanced strategy, which is something that I do often, if I had 1,000 shares of stock, and let's just say, for argument's sake, it pulls back, it's very common for me to take that 1,000 shares and reduce the exposure, let's say, by 70 or 80%. So I still have the position if I still like the idea. In other words, the trend hasn't changed, the order flow is still valid, no contradictory news came out that really invalidates the idea anymore. I will reduce my exposure, but keep that stock in my positions so that I could monitor it to put those shares back on. Now, think about what I just said. I said I'm reducing my exposure by 80%, but keeping the trade if I still like the idea. So there's only one of two ways to properly manage for me based on the way that I manage my positions. And I'm about to sneeze. Excuse me. And that's managing the dollar amount that you said you were willing to put in harm's way. It is by far the easiest way to manage positions where you either get out immediately and look for a spot to re-enter, which, by the way, with the zero commissions that are in the markets today, it really makes no sense at all to hold a position that's not working out, especially not holding the full position. You could exit the position and get back in, or exit most of the position, keep an eye on it, and you'll notice, like, the way you'd normally do it. Everybody asks how I manage a position. Let's say it comes down 50 cents. Again, just for argument's sake, and I get out of 80% of that position. Now I'm watching it. Okay, maybe now it goes down 55%, but now I only have 200 shares as opposed to 1,000. Goes down to 55 cents. Now I'm looking, okay, now it's only down 40 cents. 45 cents, 40, 35. All of a sudden now we're making higher lows in that stock of how much I'm down in the position. Now I'll go back to the stock. I'll set an alert. They'll say, okay, if it gets back to this position, if it gets back to this certain dollar amount, maybe it's a break of a previous candle, or it gets back above the opening price or the previous day's high, whatever it happens to be, whatever in your case would be a new signal to get back into that position, that's when you could consider putting back those shares on. Or if you got completely stopped out, stay on the idea. One of the biggest mistakes I made when I first started trading was I find this amazing stock does exactly what I thought it was supposed to do, really clear order flow, good momentum. I want to trade it. I take a loss and I go find something else. I'm like, what am I doing? Stick with that stock. What we called in the office was work the keyboard. Work the keyboard. Work the keyboard. In other words, keep cycling through your stocks. Don't just wait for your scanner to pop up a trade. Work the keyboard. Cycle through your stocks. Get to know your stocks. See how they're trading in real time. And if you're doing this on a swing trading basis or even longer, do the same exact thing. If you have a list of 10 or 15 stocks that you're swing trading, look at them on the daily charts, look at them on the weekly charts, see how they're experiencing price action in different time frames. So again, I can't stress this enough. If you are taking this seriously, which if you're watching the videos, thank you, and I really hope you are taking this seriously. Don't be afraid to lose money. What you should be afraid of is blowing your discipline. So if you don't like what you see, look in the mirror. Don't look to the markets. All right. So again, just to recap this, because it's really important to the longevity of growing your account, and as a matter of fact, to growing your account blazing fast, because you're not taking those big losses. Have a dollar amount you're willing to risk per trade. If it goes down to your stop loss, you already accepted the fact that that money would be at risk. Pull the trigger on the whole thing to get out of it, or reduce your share size dramatically. Pay attention to if you still like the idea. If it continues to move against you, then you can get out of the balance of it, but you're not carrying the entire thing. So I can't stress this enough, though. Do not dollar cost average as it keeps moving against you. You don't want to add to a position that's not working. If it continues to move against you, you can decide to then get out of the whole thing if the stock is just not coming back, and then look for another spot to reevaluate. Better, in my opinion, in the way I trade, I wait for it to continue to start moving back in that direction. I don't look for a spot as it's moving against me. So a little trade management tip, and we're going to talk about that getting into Chewy here, because that's the one stock that a few people either emailed me about this week or said that they were looking at. So we actually did like Chewy on the breakout. And what's kind of interesting here too is we talked about this in a couple of stocks that broke to the downside yesterday, looking for a breakout followed by an inside candlestick. So a breakout should have a well bid candlestick, meaning higher highs and higher lows to get follow through. In this case here, Chewy actually broke out, had an inside candlestick. So we said we were looking for a pullback to 34, and you can see it pulled back deeper than 34. So if it pulls back to 34 and you get stopped out, take the loss. Losses are a part of what we do. It's our inventory. Never, ever forget that. As a trader, trading losses are your inventory for your business. They have to be an accepted part of your business in order to make money. You need to have money out in the market in exchange to get an ROI on that money. So if you happen to have some trades that are losses, again, it's no different than paying rent or lights or employees or anything like that. It's a part of what we do, and you have to accept that. So it's an accepted part of it. So if you happen to have a stop loss in Chewy and it pulled back, the proper thing to do would have been to take the loss and look for a spot to reevaluate, which it might be today. I don't know. I like the fact that it closed off the lows, but we'll see. If it is, great. If it's not, that's a part of trading. So come on, put on your big boy overalls, and if you get stopped out, be disciplined, take the stop. Don't subject yourself to those big crazy losses that amateurs will take because they're pig-headed and they don't accept the loss. So come on, let's be disciplined and be real traders, right? So as far as this morning is concerned, if you happen to watch a couple of the videos over the weekend, I had said that although the market was in pretty bearish order flow since we've sold off, there was something going on that it just appeared like we should have sold off but hadn't in quite a few stocks. And the market was kind of sideways over the last 3 days. So I was saying that we were in more of a consolidation than an obvious, let's just get short. We said we're going to let the market tip its hand today. And you can see that, again, I'm not forecasting anything, but just learning how to pay attention to read the tape together. The market's actually set to spike higher. So it's going to be interesting to see if we spike higher and hold the previous resistance level, which we'll get into in a second. Actually, you know what? Let's actually do that first. So we were looking at this 3-day trading range, and we'll see where we're going to actually end up. Let's actually look at the futures because that's a much better view of where the market is. And let's actually go down to the shorter time frame. So you can see this is where we are. So over here is where we closed on Friday afternoon, and this is where we are now. So you can see this is the 3-day trading range that I've been talking about and specifically talked about yesterday. So it's going to be interesting is wherever we end up opening today, compared to, let's go back to the SPY, compared to that 3-day trading range, we're really going to be looking at this level here. Even though this is one blip above there, it looks like the 252-ish level. So if we take this down here so that you understand what I'm going to be watching in the market today, depending on where we open compared to this level, maybe we can go just a little bit higher. We're really looking for like the real price. It tried to get up there and stalled, got up here like 4 or 5 times, got up here and then just collapsed. If you were in the private chat, right in this area over here, we said we were struggling at the 3-day highs. This was going to make or break the day, and you can see what ended up happening here. So that's going to be the level that I'm going to be watching like a hawk today to determine if I want to be bullish or bearish on the day. And again, mostly what we're looking at right now is shorter time frames. So that's the game plan for today, and we're going to get into that in a little bit more detail. So anyway, that's what we're looking at on the open. Something else to keep an eye on, which obviously affected the market in a big way last week, was oil. A delayed meeting between Saudi Arabia and Russia. So it looks like it's going to be pulling back here again as well. So that's the game plan heading into today. As far as some trades are today, because the market is in consolidation mode and it looks like we're breaking out, I am actually going to be focusing on quite a few stocks today that are also on inside days, and Nike happens to be one that I really like today. Home Depot is another one. UNH is another one. Schlumberger. And last but not least, a stock that a lot of people have been trading is Boeing. Now, I want to get across something very clear that I just want to come back to the screen to make this point. And I can't, my hair is like all over the place today. I don't really care about my hair, but you can tell I have bedhead. A lot of these stocks are still in solid order flow to the downside. So the obvious question you're going to have is, why are we looking to trade these stocks in either direction? Inside day candlesticks are a 1-day strategy. By the way, they also happen to be my primary entry signal when I'm day trading. So I'm looking for obvious order flow. I'm looking for intraday bias. And then I'm looking for inside candlestick breakouts in the direction of that bias primarily. And we're kind of extrapolating that onto the daily charts where the intraday, the daily candlesticks are now consolidated. And we're looking for a 1-day trade to break out of that inside candlestick, so yesterday's high or low. And then typically they follow through for the entire day. So again, having discipline, if you break out to the upside for argument's sake and you pull back in, you get out. It didn't follow through. Real breakouts follow through. You want to write that down as well. But if we do follow through and continue to go, they're generally trades that I can hold to the close. So I'm not going to trade the wiggle and jiggle and all that stuff back and forth. If it does pick a direction and go, it's one of those trades where you can start the day off or end the week, in this case Monday, have a really solid week because you got a nice head start on your P&L for the week. So I want to go back to the charts really quickly because the weekly charts are how I wanted to just finish up on the video. We have said that most monthly candlesticks are inside. So right now we're watching the weekly candlesticks on a lot of these charts. So you can see here Boeing actually went well bid 2 weeks ago. Last week was an inside candlestick, and you can see the SPY actually hovering near the high of that range. So we are actually fairly well bid. I would almost consider this an inside candlestick. We probably broke it by a few cents, so that's not really enough for me to get excited about it. So anyway, in a lot of these stocks now, the proper way to take a look at what we're trading now into this week, because most of the monthly candlesticks are still inside candlesticks, you could use the 20-period moving average on the daily charts. But in this environment right now, because the down move was so dramatic, I am leaning a little bit more towards using the weekly candlesticks to tell me if we are well bid, well offered, and if the candle is green or red for the week. So obviously the weekly candlestick is going to reset for today. So we're looking for today's opening print for the Monday opening print on the weekly candlestick to be above or below the opening print and trade there, so we can be bullish or bearish for the week. And then hopefully for the bulls, which it looks like we're going to have a nice bounce to the upside based on the futures, does it stay there for the week? So it's going to be interesting to see if today's higher opening holds as a place for us to take off, which will catch a lot of shorts because a lot of people are leaning to the short side, and or if we open higher, stay there, and that becomes the baseline for the week, and we have a nice big green weekly candlestick to the upside. But here's the thing. Let's be, and it's interesting, we had a conversation in yesterday's Ask Me Anything about whether or not you should be flexible. Flexibility in the market can do anything is very powerful because you're not predicting, and if the market does certain things, you have your if-then scenarios. But it's very important to have a conviction in whether or not you believe a stock is going to go higher or lower. So in this case, what we're looking for is for the market to tell us what it's going to do, and then be flexible in how we manage it based on what the market is telling us. So again, I keep using super today because I'm excited when I get feedback so that we can have a nice conversation with the community in the comments and in the videos. Super good feedback. If you have any questions, absolutely post them in the comments, especially your biggest challenges. That's really the biggest stuff that I would like to review, because the sooner you can shrink that list of things that you're struggling with, you start to lose less money, and then you come out the other side where the biggest conversations we're going to have about holding winning trades longer, which is a really exciting spot to be in. So I'm going to call it a day here. Looks like the future is going to open higher. If you have any questions, absolutely leave a comment. I'll also leave my email on the bottom if you prefer to send an email as well. So have a great day, everybody. I will speak to you soon, and please be safe.